there and welcome to your Wednesday's forecast. Today I'm joined by Alexei Pogorelov, Associate in Emerging Market Economic Research with Credit Suisse, to look ahead at the dollar ruble. It's an interesting time for this pair, Alexei, with the low oil prices, the crisis in Ukraine and a depressed market for Russian equities having a strong impact on the currency's movement. How has this influenced your 1 month forecast figure standing at the 51 point?
First of all, we think that the current level of dollar ruble where it is trading now, it reflects all the highlighted issues, so lower oil prices, crisis in Ukraine, and depressed market for Russian equities. So the level we're trading it is already very low, and ruble is maybe pricing in a lot of these risks. Therefore, we believe that those entities, households, and companies who wanted to buy those to hedge the risks, they already did it. And in the near term, the level where we're trading now is comfortable enough.
At 3 months, you've estimated the dollar ruble to be sitting at 60 on the back of lower oil prices. Could you explain this further?
In the beginning of what works for the FX market well right now, that's not necessarily good for the near term, and another drop in oil prices would put under pressure all Russian assets, mainly because of flow data. If we look at the balance of payment and the current account in particular, you know that traditionally Russia had a positive current account balance, and now after dropping oil prices, export definitely will deteriorate. A $10 per barrel drop in oil prices would shave off roughly 1.5% of GDP from the export revenue side. But and the lag, the impact on export revenues is the shortest. The second round effect is the reaction of imports. And this is why it might take more time for inputs to adjust to this reality. The lag of reaction of inputs to the drop in oil prices is around 1 quarter. The effect is coming from the exchange rate, and this is like 1 quarter lag. Another third round effect is coming from a slowdown in economic activity, and the lag from this slowdown on input growth would be visible with much longer lag beyond 1 quarter or during whole next year. But 60 and why we expect ruble to be weakening in the first quarter is just because the slowdown drop in exports would be much higher than contraction in inputs. When in the remainder of the year, we expect just the opposite. So oil prices would stabilize and inputs would collapse.
Let's look ahead to 12 months' time, where you've positioned this pair around the 50 mark. Can you explain your reasons behind this prediction?
First of all, we expect some stabilization in oil prices and even some rebound, which would definitely have negative effect or positive effect on the ruble. On the other side, structurally, the economy will be closer to the end of rebalancing. And first of all, I am saying about the balance of payments first, and second is fiscal policy. The necessary cut in spending that was announced in the presidential address to the parliament would be implemented probably closer to in the second half of the year, and definitely it would be positive for the prospects of ruble appreciation.
Alexei Pogorelov with me there, discussing the future for dollar ruble. That's all for the forecast bulletin. Tune in again on Friday when Monica will be looking at another currency pair. Bye for now.